Hello everyone, how's it going? In this video, we will talk about GTII, its trading potentials, if the stock deserves to have a place in your portfolio, and why there could be a massive gain that's possible from not just the ongoing short squeeze, but the company itself. Before I begin today's topic, if you appreciate my content and would like to support my channel, please give my videos a like, comment, and subscribe to my channel. Also, please consider to take a look at the affiliate links down in the description. For the Amazon link, you can simply save it as your bookmark so that every time you purchase anything from it, a commission can be paid to me without additional costs for you. Thanks for your support, it means a lot to me. And with all that being said, let's start today's video. Over the past few days, GTII has been having a phenomenal growth of more than 30%. And increasing by more than 8% if we look at the whole month. GTII is a stock with a lot of great potentials to spike upward because it has a very large short position placed against it, and if people buy it at the same time, we actually stand a real chance to trigger a massive redemption wave from the short sellers. As far as the $1.80 level is concerned, it remains a significant resistance ceiling that has been difficult to pierce through, but my analysis is that if the stock actually makes it above there, and in a sustainable manner, we may see the volume and demand spiking considerably upward, because these kinds of things are self-fulfilling prophecies. So the higher the price goes, the more people believe that it's going to go even higher, and so goes the cycle. So my assessment regarding GTII overall is that the bullish tendency remains and can easily push the stock to much higher levels. Now with that being said, of course GTII remains a short-term trading position instead of a long-term holding investment to be kept in your portfolio. But I think that most people watching this video coming in, as you click on the thumbnail, you already know in which kind of content you're getting into, right? You know that this company has, specific characteristics, and good fundamentals may not necessarily be one of these as of yet. But we're fine with it, and as long as the trading approach reflects this characteristic, then it's going to be fine. Global Tech Industry Group, trading under the ticker symbol GTII on the OTC market, is a company based in Nevada focusing on acquiring growth and startup companies to build a portfolio of holdings in promising companies that will shape and make tomorrow's economy. Simply put, it is an acquirer whose value depends entirely on the quality of expertise, assets, research, and people that they can manage to buy within the sectors that they choose. The reason why this kind of structure can be attractive is because the narrative can be very flexible, which can be adapted to whatever is trending in the market at the moment. Now, of course, if consistency and continuity are non-negotiable values that you hold dear to, this may not be the best stock for you, but for market participants who simply want to make a quick buck by buying low and selling high, this is actually a pretty smart position to adopt. I mean, in a way, GTII reminds me of another company that we have covered before on the channel called Ideanomics, trading under the ticker symbol IDEX. It may not have the same kind of purchasing profile, but ultimately their value on the proposal relies on the company's capacity to retain valuable assets with high potentials to be popular and trending topics in the months and years to come. It is like putting your money in a publicly traded VC fund or early-stage business incubators, because the investment can be done at a very early stage. The equity can be very inexpensive to acquire, to be later sold during a different economic phase. That is essentially the reason why companies like GTII have always interested the market. It's not always because we believe wholeheartedly that those kinds of companies are going to be succeeding. It's just because the narrative can adapt. With that being said, those kinds of companies obviously come with their own risks, as the lack of trust in the market or Put it more simply, the lack of demand for risks can really hurt its stock price. If the market remains bearish, then many titles might be losing value, and it's going to be a matter of time before the capital becomes more risk-averse than ever and would collectively prefer to go into safer assets, guaranteeing a yield. This kind of situation isn't only bad for fundamental perspectives, but also from a financial perspective. It can force companies to get funds either with higher interest rates or from companies that have a shadier origin or shadier business model. This is precisely what happened with GTII. So some time ago, it entered into an agreement with a company with a pretty steep track record in doing this kind of thing to companies they lend money to. They know that those companies are in difficulties, they short sell their shares, and they make profits both ways. Interest on one hand, profits by short selling on the other. And in the end, because the market tends to be a self-fulfilling prophecy, whatever they think will happen will end up happening if the position size is big enough. So a stock can be borrowed from brokers, sold in the market, and be bought back later, hopefully at a lower price than when it was first sold to make a quick buck. Unlike the typical long positions though, a short position will generate financial fees that need to be paid periodically to keep the position open, which would further motivate the short sellers to buy back the positions if they spot a move against their position, regardless of whether it can be justified. This is another major attraction of GTII. It has an important short position stacked against it, which is another way to say that there is a high potential for short squeeze to occur, which may force many short positions to be redeemed so that the short sellers don't suffer massive losses. We have to remember that if a long position has a potential loss that's between the entry price and zero, the potential loss for short position is theoretically much larger, between the entry price and infinite high, in addition to the financial costs payable to brokers if the position doesn't close. With that being said, GTII obviously offers a lot of potentials and opportunities in the upward volatilities. But we gotta remember that we have to stay vigilant about the market mood, both in its own right and towards GTII in particular. We also have to remember I believe that GTII has a bright future in the next few months, and that now is a decent time to start buying. I believe that the stock will be able to reach up to $5 if the current momentum maintains itself. Obviously, it is considered as a relatively risky position to be had, so I would really recommend to keep the overall exposure in GTII within 5% of your portfolio.